Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The global markets were somewhat volatile on Thursday ahead of the Federal Reserve Chairman Jerome Powell's speech at the two-day Jackson Hole Symposium. Investors are looking for clues about the pace of future rate hikes as they view a slightly greater likelihood of a third 75 base point interest rate hike from the Fed at its policy meeting next month, compared with a 50 base point increase. Looking at the technical aspect for the Australian dollar, we're still looking somewhat bullish as we've broken or remain above the midway point on the RSI and therefore could see further gains, that is up towards the region of 70.35 after we have clearly broken the resistant level at 69.65 after inking an intraday higher around 69.80. No doubt the market will be volatile as Jerome Powell delivers his speech. Nevertheless, any pullback should find opportunity closer to the bottom side of the range around 69 cents. As I mentioned, further gains are anticipated due to the break of that 69.65. So I'm looking somewhere between 70.35 to 70.70 as the initial target. It was another mixed day for the euro. After posting the dragonfly doji, has ended up posting an inverted hammer. Meanwhile, the dollar index, which measures the greenback strength against a basket of 6 major currencies, ended flat around 108.40. As I mentioned, the market is awaiting Jackson Hole Symposium in Wyoming's speech from Jerome Powell. So no doubt will be a little bit quieter to the start of the session. Still, I believe the market could actually see the US dollar tumble and therefore look towards the euro targeting the 100.55.75 objective, with any pullback likely to be shallow. The dollar yen still remains on the back foot as the indicator drops further and now nearly breaking through the midway point, but leaving it mixed at present. In light of this slightly curved pattern coming through the MACD, I'm looking for a further down test, and that is towards the region of 135.30.50 area where I've outlined here, and then reassess just in case we see a little bit of profit taking. The sterling still holds to a slightly positive pattern after posting an engulfing candle around that 117 area. The call at the moment is still to the upside, and I'm looking for a rise up towards 118.70, and a break there would give further scope to 120. But the technicals are somewhat lackluster, so it does put a little bit of a question mark in whether we will get the break today. Nevertheless, keep an eye on that level around 118.70. The market for gold still holds to its 3.5 day gains as it looks towards that top side challenge around 1,758 to 62. Now we do need a New York close above there to support further gains. That is up towards 1,770 to about 1,782 to 84. However, keep an eye on these technicals, are a little bit flat and therefore may see some disappointment on the challenge of 1,758 to 62. And could see a pullback towards that bottom side around 1,730 to 32. Looking at oil, the market retreated from that key level, which was at $96 figure 50, and from the retreat has posted a weak outside range day or an engulfing candle. Keeping an eye on this pattern here, because a close under $92 a barrel would give further indication for another decline, that is towards $86 as a potential target. Well, that wraps it for the morning. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the day.